Good afternoon, everyone. It's 20 to 6 here on Tuesday, the 1st of November. I suppose that's 20 to 2 in American Eastern Time. There's only 4 hours difference this week. So what have we got on VectorVest US? Well, short-term trend is up. Underlying trend is still down, but my word, it's only got a little bit to go before that underlying trend will turn up. If the VectorVest metric, the MTI, goes greater than 1, then the underlying trend will turn to up. The longest term measure of the trend on VectorVest US is still down, and that's got quite a bit of work to do, because for that to turn to a confirmed up, the buy-sell ratio, the number of shares in the buy divided by the number of shares in the sell, must actually get above 1, and it's only at 0.51 at the moment. It can move very fast, but it's still a day or two away from a confirmed up. So the market took the ISM manufacturing news in its stride, lost a little bit of the overnight gain, but the S&P sitting down 15 points ahead of a big news week. As you probably know, the Fed is tomorrow. Couldn't be bigger. We've got the Bank of England on Thursday, and we've got non-farm payrolls on Friday. So huge numbers during the course of the week. If we have a look at the VectorVest Composite, click on timing, and I pull up the chart of the VectorVest Composite. Here it is. That's over the last 6 months. This is an equally weighted index of all of the shares that we follow on the North American market. That's what it's done. I look at it over 6 months now. That's the longest term measure of the trend. Again, over a year, we can see that all the sell signals have been brutes of move, and we can see these smaller moves, these rallies within the bear market. So we haven't had a buy signal as yet on the longest term measure of the trend. The underlying trend is still down, but the medium term measure of the trend, the DEW, that turned up on the 25th. So that's been up now the guts of a week. I've taken a couple of positions based on that. I mentioned one of them. We'll have a look at the SPX in a second. We'll have a look at the shortest term measure of the trend. That's the primary wave. And that primary wave has given some great signals over the last little while. As you can see, only one of them was a false signal out of all of this. So, in my short-term trading of the SPX, I like to be taking my trades in sync with the VectorVest primary wave. Not always, but mostly in sync with the VectorVest primary wave. So if I have a look at some of the positions that I've got, I haven't taken too many based on that DEW, because I would like this market, this rally that we're seeing, to me looks more like a rally in a bear market than a market bottom. But clearly the Fed can in fact blow that view away. I've got 4 positions running. Clearfield I bought into last week, and it went very well. It's off a bit today. Let's have a look at these. The XLE is going great guns. Shockwave is just about profitable. Let's have a look at these. So here we go. There we go. That's we look at this now. That was the entry into Clearfields. I had a good run in this a few months ago. Not the best entry. It's pulled back a little bit today on me. But stop loss is now at entry on that. That's the XLE. That's going well. I'm into the XLE since the VectorVest buy signal on the 4th, just there, just on the 4th. So that's going us from 80 to 90. Not bad in this environment. That's Shockwave, folks. And I spoke about Shockwave when I did this last week. Beautiful setup, a beautiful triangle here. And I thought I was off to the races here, and then I gave it all back again. Those of you that are Fibonacci scholars, that low was exactly 78% of that big move. And today's low is exactly 62% of this move. So it is vibrating to the Fibonacci sequence. It's had a good day today. Let's see how it goes. My stop loss is now underneath that big sell-off day. That means the stop loss is at about 265. Okay, so it's a very small cap company, and as I said last week, it's not for the faint-hearted. This is the GDX. GDX I bought based on this big Fibonacci pattern. This run up an AB equals CD down. It's still hanging in there. It needs to do a bit more work, but I haven't called the gold market that well over the last few months. So those are the positions that I've got. I'm not going to do anything more until we get this Fed announcement out of the way. And let's have a look at the SPX. I've got the SPX on this particular chart. So this is the SPX, or the S&P 500 over the last 3 months. This is the pit session only. So as I see it, we've got 5 waves down. That means we've got an impulsive wave down. As you can see, this top didn't impinge on that particular bottom. That's a good sign that we've got an impulsive wave down. However, this run up starting to look a little bit corrective to me. So let's try and draw in some lines. For example, if I put in a horizontal line, we can see that where we're at the moment is at that old bottom. Let's make that a color we can see. Blue. Okay, so this support is now resistance. Now, what's more interesting, and the confluences always surprise people, but if I take a fib between that high and that low, that's 62% coming in there. And if I do it exactly, it comes pretty much to the tick. And it's also 50% of this. So we got this confluence from wherever we take the fib from. The other thing that I note, folks, is that this has got a flag look about it. It's got a bear flag look about it. I've done my best to draw that in, and that seems to have dictated the bottom of this today. Is this a flag, or is it a rising wedge? Flag, the two lines are parallel. If it's a rising wedge, the two lines are coming together. I leave that to your better judgment. Now, what's happened today on the SPX is that Friday you had that big up day. My word, that was a great day. That was a 60-point day for me. And then yesterday traded an inside bar. The VectorVest people in the UK will know I didn't trade yesterday. I had a hospital appointment yesterday. Miles on the clock, unfortunately. And then today it's traded an outside day. Now, if you get a pattern, an inside day and then an outside day, that's a pattern that is known as a pop gun. It's not that common. It's an old floor trader's tool. And the pop gun invariably precedes an explosive move. Now, it is a volatility pattern. The problem with that is that it predicts an explosive move, but you don't know which damn way it's going to explode. And of course, the cynics would say that you didn't need to look at bars to work that out. You know, the Fed is going to speak tomorrow, and that's going to produce an explosive move. So the rules for this is that if it breaks the range of the pop gun, and that would be the low of Friday or the high of today, if it breaks out through those levels, that would be the trade. So unfortunately, this has got an air that it wants to pull back to me. The stochastic is overbought and showing a little bit of divergence up here. Plus, this looks a bit like a bear flag. So a close. I'm not going to trade the Fed. That's just too much for me. There'll be plenty of room in it in my humble opinion, for a move when the Fed has said what the Fed is going to do. So the technical chart, unfortunately, looks bearish for at least a pullback here. Clearly, the Fed can blow that into touch. And I assure you, folks, that if we were to break up through these levels, this market will soar. So an awful lot's going to be decided by whatever they do in terms of interest rates, and probably more important in the rhetoric after the announcement is made as to whether they're going to, in fact, pause. So the face of the chart, unfortunately, looks a little bearish. So just be careful. I won't take any more positions until this is out of the way. In the UK, well, we had our DEW up signal. I did a Q&A this afternoon where we looked at the UK in a great deal of detail. Anybody who wants a link to, it's a 1 hour presentation. Anybody who wants a link to that, then just please email me, david.paul@vectorvest.com, and I'll send you a link to that. So just be careful out there. Let's get this news out of the way. Thanks very much. Bye-bye.